Accounting salaries are up. This is the IssuesWatch podcast. Hi, I'm Don Meyer, Chief Growth Officer at the New Jersey Society of CPAs, and welcome to the IssuesWatch podcast. One of the hottest topics in the profession right now is compensation. Accounting Today recently released its 2025 salary survey, which offers a comprehensive look at pay across firms of all sizes and levels. Joining me today to break down the survey results and what they mean for firms, professionals, and the CPA pipeline is Dan Hood, Editor-in-Chief of Accounting Today. Welcome back, Dan.
Thanks for having me.
All right, so let's start with the big picture. What were the key takeaways from this year's salary survey, and what surprised you the most?
So key takeaways, I think that the thing that most people are interested in, right? Salaries are up, particularly at the entry level, up in a big way. We saw a $10,000 jump in entry level salaries from 2024 to 2025, which is spectacular. Among other things, it closes the gap that had been between entry level accounting salaries and entry level salaries in finance and in tech and in other aspects of business. So it's obviously it's not making it up at every single firm, but in general, what we're seeing is the profession is really answering that problem of accounting entry-level salaries being too low. We also saw big jumps in partner salaries at small firms, almost a $30,000 jump there. So that was a little bit surprising to us. That would suggest some things about how small firms are looking at their succession planning and at how they're building their leadership strength. I would say, though, the big surprise for me was that over half, about 54% of respondents said they don't feel the need to jump jobs to get a salary boost. Only about a third said probably or definitely. And I can tell you, if you look at almost any other part of the economy, the vast majority of people, like well over 2/3, close to an overwhelming majority, would say, "Oh yeah, that's just common wisdom. You have to jump jobs to get a big salary." But in accounting, not so much. They're not feeling that way. They're feeling like they can get recognized and get rewarded in their firms. And this is in keeping with a thing we saw last year as well, which is that overall, about 2/3 of accountants feel pretty good about where they're working. They like the firm they're working for. They're comfortable there. They think that the firm treats them pretty well. So there's some very good news. I think is really the key takeaway. There's a lot of good news out there. We have not fixed the pipeline problem. We have not fixed the capacity issues. But there's a lot of good news in terms of the salaries moving in the right direction and people feeling pretty good about where they work and being in the profession.
Yeah, I can recall as recently as a couple of years ago, there being all kinds of TikTok videos where, so-called experts were encouraging young people to basically change jobs every year because that's the only way you can get promotions and salary increases. But now it seems like this is what you're hearing is sort of in line with this new phenomenon called job hugging, where people are afraid to leave their job because of the old theory of, last in, first out type of thing.
Right. And that's, yeah, exactly. And I think some of that is particularly in the broader economy, is about fears of possible recession or companies laying off. AI is coming in and taking everybody's job, et cetera, et cetera. I'm saying that's the fear, is that AI is coming and taking everybody's job. I should be careful about that. Mm-hmm. But I think for accounting, the interesting thing is that it's I'm not sure. We haven't done the survey long enough. Didn't do it far enough back in the past to see. I'm not sure if accountants ever felt that they needed to job hop, right? It was a common, like I said, common wisdom, conventional wisdom that everybody had to. And you're right, certainly the job experts were telling people everywhere, hey, you got to jump, because it is true in a lot of other industries. But I wonder if accountants felt that way 3, 4, 5 years ago, and certainly everyone was telling them to, as you say. But I wonder if they felt that way. I wish we'd done the survey back then as well.
Well, I guess also it depended on kind of what the overall plan was. If obviously you want to be a partner in a firm, the best thing to do is to stick around there 5, 10, 15, 20 years or so. But, maybe some of those objectives have changed as well. But I wanted to jump back to, we have a lot of younger viewers and listeners. So I'm sure that their ears perked up when you mentioned the about $10,000 increase from last year. So how much of that, because there's a lot of comparison shopping within the accounting and finance profession. And I've heard for a number of years that the accounting profession needs to pay more because of tech and finance. So how much of that $10,000 increase do you think is in response to the concerns about trying to compete with fields like tech and finance?
Right. I would say all of it. 110% of it, 120%, 200% of it, as much as you can get. I really do think that's a serious response to the problems we've been seeing over the last several years in terms of capacity, and I think they all sort of came to a head last year with the publication of the National Pipeline Advisory Group report, which came right out and said, yeah, salaries are too low for entry level accountants. And the interesting thing is that it's really that first 1 to 3 to 4 or 5 years where the salaries were off, right, where they weren't in keeping with, or they weren't competitive with a lot of other industries. Once you got beyond that, they tended to jump up fairly significantly. There was a big plateau. And so it really was a clear key problem for bringing in new people it was just too low. So I think those salaries were too low and were demonstrably too low. Like anybody looking at a chart would go, oh, yeah, you're way off from banking or finance. So like I said, I think 110, 120% of it is due to that. And I don't, it's not the only thing that firms need to do. It's not the only thing the profession needs to do to fix the pipeline problem. But it's going to be a big help, right? Just to say, if you don't look, if they look at the profession and go, oh yeah, it's competitive, as opposed to looking and going, wow, I would be getting $10,000 less than if I went to, as you say, finance or banking or tech, or even a lot of other just sort of basic business positions that weren't in counting, were paying salaries that were higher. And so, I think they've gotten rid of that disadvantage.
Right. I think it'll also help with convincing more people to take the CPA exam, because one of the things that I've always said, or the profession has always said, is if you get your CPA license over the course of your career, I'm not sure what the number is now, but I know years ago it was like $1 million. You're going to make $1 million more as a CPA than you would if you remained an accountant. And now, but I think what started happening was people were like, okay, well, no, that's great, but that's going to be over a long period of time. I want more now, which is understandable, because like student loan debt and the price of housing and things like that. So I think it will actually help with that message about taking the CPA exam, because now you can say, well, we are giving you more upfront, and you can make more in the long run by taking the CPA exam.
Absolutely, 100%. And that's the thing is that a lot of the rewards in accounting were sort of long term. They were pushed off towards the end, right? You had to wait to get it. You weren't going to get it as an entry level staffer, and so you had to be making a long term investment. As you say, these are people coming out of college. This is the first time they're earning. They've got debt. They need to pay that off. It is difficult for them to prioritize that sort of long term thinking. Now, with that initial hurdle out of the way, and hopefully firms are going to be thinking more carefully about how they incentivize people to take the CPA exam, getting bonuses for completing it, for instance, getting help with exam prep materials, getting time off, getting recognition that this is a big thing, that's something we need this person to do. So we're going to make it a priority for them in terms of their workload, in terms of their scheduling, and so on. It should absolutely help this salary thing should get that out of the way and allow them to focus on that, and hopefully give firms a hint as to the kind of ways they need to work with their young staff to push them in the directions they want them to go.
Yeah, and we've been hearing from firms that they want to expedite that process of turning somebody from a first-year associate into eventually manager or director. And honestly, the whole CPA exam process is a great way to expedite that, plus AI and other tools as well. But to get that person in as that first-year associate, evidence would show you got to pay them more. So I think that everything is sort of connected. And that's a good first step, is just to pay more. Let's talk a little bit about smaller firms. You said you saw increases for managers and partners for smaller firms. And what do you think that says about how compensation strategies are shifting across the profession?
I think, let's put it this way. I think we're seeing more compensation strategies. I'm not sure how much firms really have been thinking strategically about their compensation systems and how much they have been tying their compensation systems to their goals, right? In terms of, do we want to bring in more entry level people? Well, here's an idea. Let's pay them more. And similarly, like I said, the biggest jump we saw in terms of median salaries, all these things are medians as opposed to averages, was partners at smaller firms had a $30,000 jump last year. Now, some of that's, it's not exactly the same audience from year to year that we're surveying. It's not exactly the same people. So there's a little bit of that might be, a slightly different focus in our, not focus, but slightly different set of respondents. But most of that is some kind of strategic thinking on the part of firms about, what's our future going to be like? How do we build a succession plan? How do we build a bench of partners that will take over in 10 years and 20 years and 30 years? And I think they're thinking a lot more about what that means. One of the things it means is salaries, more money, as we we've been talking all through this, is about the power of money to incentivize people to come to accounting and stay in accounting for the long term. And some of that means front loading some of that reward. So I think that's what we're seeing there is the strategy of smaller firms saying, hey, particularly smaller firms that have older partners. A lot of baby boomers are still looking to retire. We've been going through the retirement of the baby boomers for about 10 years now. And there's still plenty left to retire, and they have to think about who are they going to hand the firm to. And a big part of that is saying, hey, we're going to pay you a lot of money and we're going to get you to stick around so that you'll be ready when we're ready to go. I don't think it's the only thing, it's the only part of their strategy, but I think they're upping the importance of salary in their strategies.
All right. A few minutes ago, you also talked about bonuses, and I think the idea of a total compensation package is not new to tech or finance, but I think it's fairly new to the accounting profession. So, what trends stood out about how firms are using total compensation packages to retain people?
Right. Well, I think the interesting thing there is as you talk about like total compensation package, thinking about everything you're doing for and with an employee as part of getting them to stay and be engaged and be a big part of your organization for a long time. I think firms are doing more of that. I think a lot of bonuses in accounting firms had been sort of ad hoc, not necessarily in the sense of that, oh, I've just decided to give a bonus now, but they weren't really tied to a broader strategy in terms of saying, how do we make sure that these bonuses incentivize people and keep them going, as opposed to just being, oh, hey, I got some money, that's nice. One of the things I think that's an indication of that there's still room to move on this is that the overwhelming majority of bonuses go to people at the partner level or above. Now that's important. Obviously, you got to keep your partners on board and engaged, and they're the owners of the firm, so it makes some sense there. But the power of bonuses, in addition to, as you say, in addition to salary as part of a total compensation package, cannot be ignored. It is a huge way of reinforcing the value you see in a staff member, and I think we're seeing more firms think about that, as I said, sort of strategically as you're building that, what you're talking about, the total compensation package. But I think we still have a long way to go. I will say, in terms of firms, one thing they're doing right is performance bonuses are the most common form of bonuses, right? So it's a way of saying, hey, if you achieve, you get rewarded. But it also doesn't, there's a broader way to think about it where you're saying, where you're making clear that what you want them to achieve is part of a strategy. What you want them to achieve is part of a strategy for them and set of goals for them, that it's advancing their career. So I think there's still some room there to improve the way bonuses are used. I think, we see a fair amount of profit sharing, which is also a great way to do it. But I'm not sure the firms are, as you say, tying these all together in a whole comprehensive package. We're seeing some bigger firms, and this is from other surveys we do in terms of best workplaces, stuff like that, where they're adding all kinds of extras to that total compensation package. One, the hot item this year, just in case you're wondering, is pet insurance, and that's a form of compensation, right? Anything, right? It's sort of, but if people love their pets, and pet health care is expensive, so we're seeing a lot of firms offer that, not necessarily to everybody, because not everybody is a pet, but as an option. And when you think about all those extra things that firms can do and can give out to staff that are basically forms of pay, they're just not coming in a paycheck. I think we're seeing more firms think strategically about that, but more firms still need to.
Yeah, and that makes a lot of sense. I mean, I think long gone are the days when the incentives were things like foosball tables and ice cream on Wednesdays and things like that. Yeah, it has to have more of a financial impact. In fact, even as a state society, we're doing more in that. I believe we do also offer pet insurance. And just recently, we engaged in a partnership with KinderCare, which provides daycare services, so our members can get 10% off of daycare services. So it's a financial benefit to them, not directly through us, but through a relationship with us. And I guess the accounting firms are starting to look at that same type of financial benefit, not in salary or bonus, but it's still a benefit, and it's still a reason for somebody to stay with a particular firm.
Yep, absolutely. And I mean, it's those things end up being money, right? If everybody recognizes it's got to be accountants, it's just a matter of thinking about it, saying, oh yeah, right. Yeah, that ends up being, money in your pocket. Even like I said, even if it's not actual cash or coming into your paycheck, discounts on childcare, right? That's huge. And there's a million other small programs like that, or I should say varying degrees of small. Pet insurance, I think of small. Healthcare, or not healthcare, childcare is huge, a huge expense for a lot of people. And there's a million other little programs like that that are, they're maybe not as big as bonuses or salary, but they're important when you add them all up, and they make firms sticky for
Yeah.
staff. I will say, just to go back to, right, you talked about the ice cream on Wednesdays and that sort of stuff. We can't get rid of that. That you still got to do that. That's
Yeah.
that's table stakes. You got to have that sort of stuff. This is one
Yeah.
of the things we discover more and more as we look at how firms interact with their staff, is that everything has to be in play. You can't. There is no single silver bullet. Salary is a big one, but it can't work alone. It's got to go in with the bonuses. It's got to go in with the type of insurance you offer. It's got to go in with all the perks and the benefits. It's got to go in with the culture you develop with, as you say, ice cream on Wednesdays, or back rubs during tax season, or puppies
Right.
coming in for de-stressing, whatever the case may be. All of those things you have to have in place, because it's a serious competition to keep people on board. And you want to make sure that that you're in among the group with the greater than 50% of people who say, yeah, I'll stick around.
Right. Yeah. And God help the firm that removes the gourmet coffee from the kitchen. Yeah.
Well, that's just a human right. I mean,
Yeah,
that's
that's true. That's
you know,
true. I think it's in the Constitution, if I'm not mistaken.
it's one
Yeah.
of the later amendments, but it's in there.
Yeah.
You keep looking.
Yeah. So one of the frequent conversations I have with students is about, where they should work, whether it's the first job or second job or internship. And of course, they all gravitate towards the larger firms. I think, of course, one main reason is it looks good on a resume to work for a big four or large firm. But a lot of time, they can't employ everybody. And so I've encouraged a lot of younger people to look at smaller firms. And I've made recommendations. But I think there's probably some reluctance because maybe they haven't heard of the firm, but also compensation is an issue. So what can I say based on your findings? What could I tell a student about how small firms are being more competitive in this environment with salary and other types of benefits?
Right. You can absolutely say that they are competitive. We don't see or barely any difference between small firms and large firms at the entry level and staff and senior levels. We don't see any real difference in the median salary between small firms and large firms. So they are absolutely competitive on that level. You will see the one change you will see is geographically, right? In different markets, salaries are different because cost of living is different. But in terms of small firms versus large firms, no difference in level of salary there. So it's just as competitive. It also, the thing about the small firms, one of the things that's great about them is you are on the front lines right away. You are so close to everything. You're so close to the way the firms are run. You're so close to the clients. You're so close to everything you need to know to learn to become a better and more successful accountant than you are at a larger firm. You have many, many more opportunities just because the firms are smaller. So it's much easier for you to get brought along on a client call. Much easier for you to understand how the firm is operating. Because there's so few people in them that there's less of a hierarchy. There's less distance between you and business decisions and so on. It's just, I think it's a great idea to recommend small firms. That's a great place to start a career because, again, you're so close to everything the firm is doing, or you're able to be so close to everything the firm is doing. There's no distance necessarily between you and how the firm is marketed, how the firm is promoted, how it runs its IT, how it runs its partnership, how it makes business decisions, how its clients think. You have an opportunity to be close to all of those much more quickly than you might at a larger firm.
So earlier on, you had said, and I agree with you, that the increase in salaries, which is great, is not necessarily solving the pipeline and retention problems on their own. And also, we had talked about the fact that there is this need for firms to rethink culture, career development, other monetary and non-monetary factors as well. You speak with CPAs and accounting firms all the time. Do you find that they are starting to make these changes to their compensation strategy to make sure that they recruit and retain the people? Do you think these changes are happening?
I do. I think it's, as with all things, right? There's some organizations that are way ahead and some organizations that are lagging a little bit. Accountants tend to wait for other accountants to do things to see if it works, and if it works, then they adopt it. So I would say,
You're preaching to the choir.
you know what I'm talking about, and that, which is perfect. I mean, that's reasonable. That's not a crazy position to take. Hey, let's
Right,
see if it works for them. And I think we're at the point now where people are starting to see, yeah, it does work for them. The pioneers that have gone out and built these, total thing, what you're talking about, this sort of total compensation package. We can add that to a sort of a total career package where it's not just the compensation in all its many forms. It's also the career opportunities you give people. It's the mentoring and the education you give them. It's the opportunities that you give them to expose themselves to a million different new areas of accounting and all that sort of stuff. When you put all that together, people are seeing that that really works, that that keeps people on board, keeps people happy. And so I think we're at the point where it's sort of been proven at the pioneering firms, you know, the top 25% or 30% of firms that are always going to try something new. And when I say top 25 or 30%, that's not by size. That's just by the firms that are out there experimenting and trying new things and building new models. It's now pretty much been proven that that's how you keep staff, that that's what you have to do to keep staff. That's the best way to do it, to keep them engaged, to keep them wanting to be partners throughout their career with you. And so I think we're going to start seeing it. I think we already are, but I think we're going to keep seeing it spread throughout the rest of the profession to the point where all these things sort of become, as I said, about the ice cream on Wednesdays, table stakes, right? It becomes the things you have to do if you want to be an employer in this space, you're going to have to do this whole suite of things. It's not yet expanded to everybody, but it's going to start soon.
Yeah. Yeah. CPAs are not necessarily early adopters, but I will say, generally speaking, they recognize a good idea when they see one.
Absolutely. Absolutely. They see it when it works. They'll pick it up. And the thing is, they want to see it work at another accounting firm. As long as it works at another accounting firm, that's what any other business can do it. That doesn't matter if it's an accounting firm that does it. They'll say, yes, all right, that worked. Let me try it.
Yeah. Well, Dan, the last time we spoke, we talked about the pipeline. I remember you kind of concluded that podcast with the line, fewer war stories, more success stories. So I think your study clearly reveals a success story for the profession, that it's compensating its employees, it's making great strides to recruit and retain employees. So we will end it with that success story. Thanks again for joining us today. Really appreciate it.
Thanks for having me. It's always great to be here.
Thanks for listening or watching. See the show notes for a link to the full report and other resources.